Ladies and gentlemen, good day and welcome to Q4 and FY22 earnings conference call of Bigbloc Construction Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Karan Thakkar. Thank you, and over to you, sir.
Thank you. Good afternoon, everyone. This is Karan Thakkar. On behalf of Essential Technologies, I welcome you all to Bigbloc Construction Limited Q4 and FY22 earnings conference call. From the management, we have Mr. Narayan Sabu, Chairman and Executive Director, Mr. Naresh Sabu, Managing Director, Mr. Mohit Sabu, Director and CFO, and Mr. Manish Sabu, Marketing and Strategy. I would request you to refer to the investor presentation that has been uploaded on the exchange, which will throw much more light. Starting with statutory declarations, certain statements in the Concall may be forward-looking. These statements are based on management's current expectations and are subject to uncertainty and changes in circumstances. These statements are not guarantees of future results. May I now request Mr. Mohit Sabu to take us through his opening remarks, subsequent to which we can open the floor for the Q&A session. Thank you, and over to you, Mohit ji.
Good morning, everyone. I am Mohit Sabu, Director and CFO at Bigbloc Construction Limited, welcoming you to the Q4 and FY22 earnings call for Bigbloc Construction Limited. Bigbloc Construction Limited is India's premier AAC block manufacturing company, which is having currently two plants spread across two different locations. One at Umargaon, which is having an installed capacity of 325,000 cubic meters per annum to cater to the markets of Mumbai, Pune, Vapi, Silvassa, and other regions of Maharashtra. Whereas other plant is located near Ahmedabad in its wholly owned subsidiary company by the name of Star Bigbloc Building Elements Private Limited. The installed capacity of this plant is around 250,000 cubic meters per annum, and this is used for servicing the markets of Ahmedabad, Baroda, North Gujarat, Madhya Pradesh, as well as Rajasthan. So AAC blocks is a lightweight green building material which is used as a substitute for red brick, and 65% of the raw material in this material is fly ash, which is a waste for the thermal power plant. Apart from that, the other additives used for making AAC blocks is cement, lime, aluminium powder, gypsum, as well as some other chemicals to give strength and stability to the material. During the last year, we have done lots of achievements. To come down to the results, for quarter-over-quarter, the company has reported revenue of 531 million, which is a 25% increase over Q4 FY21, and EBITDA of 108 million, which is a 85% increase over Q4 FY21, with a PAT of around 75 million, which is an increase of 116% over Q4 FY21. To come down to the consolidated performance year over year for FY22 against FY21, the revenue has been reported at 1752 million, which is a 70% increase over the revenue from FY21. The EBITDA has gone from 122 million to 277 million, which is a 125% increase over FY21. Moreover, there has been a good volume increase also from 375,000 cubic meter per annum in FY21 to 498,000 cubic meter in FY22, and the EPS has also increased from 35 paise per share to 2 rupees 27 paise per share. The company has achieved excellent capacity utilization in the last year. Also, we have done some debottlenecking in the last year at our Umargaon unit, whereby we have increased our capacities from 300,000 to 325,000 cubic meters per annum. We are one of the only companies in the country who is currently earning carbon credits for manufacturing of AAC blocks. The project at Umargaon, which was installed in 2012, was registered for carbon credits in the same year, and at that point of time we had registered the project for 10 years. So the validity was expiring in FY22 itself, but we have been able to get the project extended for earning carbon credits for further 20 years, and now the expiry for the same is 2042. So we'll continue earning carbon credits for the next 20 years. Also, last year has been a phenomenal year where we have been able to, utilize our capacities to the maximum possible level, and that's the reason that we have announced a few expansions in the company. In the quarter of December, we did a JVA with a Thai company by the name of Siam Cement Group, SCG, which is the Forbes 641 rated company, and they are into various businesses which involve construction, cement, petrochemicals, packaging, etc. And this will be their first investment in India, whereby we'll be setting up altogether a new greenfield unit for manufacturing of AAC panels as well as AAC blocks. So we have just incorporated the company currently, in which Bigbloc is holding a stake of 52%, whereas SCG, the Thai company, is holding a stake of 48%. And we'll be setting up a greenfield unit in the region of Ahmedabad with a capex of almost 55 to 60 crores and a capacity of 3 per annum. Also, in the last quarter, we did an announcement for increasing our capacities of AAC blocks as well, whereby we are incorporating a wholly owned subsidiary of Bigbloc, which is already done by the name of Bigbloc Building Elements Private Limited. And we'll be setting up a greenfield unit in Palghar district at Wada, for which we have recently purchased land of 9.5 acres. And we'll be setting up a plant with a capex of almost 60 to 70 crores, for which the manufacturing installed capacity will be 500,000 cubic meter per annum. This will be the largest AAC blocks plant in India, and post installation of these two units, from currently the leader in Western India, we will become the leader in India, and we will become the largest company manufacturing AAC blocks in the country. I now now request the speaker to start the Q&A section.
Thank you very much. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Anyone who wishes to ask a question at this time, they may please press star and 1. The first question is on the line of Nishant Shah from MK. Please go ahead.
Yeah, hi sir. Congratulations for the good set of numbers. Basically, I have 3 questions. The first is on the strategy part. Since we are hearing the ACC Ambuja getting going off the field, what will be the impact on the company?
Hello everyone, Manish Sabu here. So ACC Ambuja, basically even currently the cement prices of late have gone up a bit, and I think they have become steady at their levels. So even ACC Ambuja, let's say, being acquired by any of the companies, which we are hearing about, I don't see any impact, honestly, on suppliers of cement. And the region we are in currently, we have various suppliers. So we have an option of buying cement from at least 7 to 8 suppliers. So that way, I don't see any impact on the company's performances or working.
Okay, but on the company perspective, what I think so, it forms around 10-12% of the total revenue.
So currently, if you see during the last year, the revenue by sale of AAC blocks to Ambuja or ACC would have been around 3 to 4%. So that's not a huge impact, to be very frank. And moreover, the demand scenario and the real estate growth scenario is such that even if any customer like ACC or Ambuja moves out, it's not much of a challenge, as our sales are not concentrated on a single supplier at all.
Okay.
So to any single supplier, our sales as of today would be maximum on an average 3 to 4% per month.
Okay, got it. Got it. So not much impact on it. Another question is on the marketing strategy. So, are you doing any kind of a PR or marketing advertisement, something like that? So, what's the strategy for that?
We already have a PR in place, and the company is doing PR for financial PR as well. And soon the company is planning actually to make Nextbloc as a brand, because as mentioned before, we are currently, the largest AAC manufacturer in Western India. And the idea is, to have, after these two plants, we'll be the largest in India, and maybe in the next year we plan to shift from Western region and have a pan-India presence. So we are planning at marketing PR as well in current year.
Okay, and what will be the cost attached to it? Maybe any rough idea?
So that honestly needs to be figured out, but looking at the company's, increasing productions and everything, that will not be much, looking at, the overall production and all. And the maximum what we are currently estimating is about 2 lakh rupees per month, so that will not have much of an impact.
Okay, got it. Okay, that's all from my side. Thank you.
Thank you. Our next question is in the line of Pranay Jain as an individual investor. Please go ahead.
Thank you for this opportunity and congratulations on the good Q4 numbers. I had a couple of questions, and it's not short term, it's a little long term. So for the next 2 years, based on the capacities which we are bringing on stream, what is the kind of revenue and margins that we are looking at?
So just to get back to you, for the next 2 years, we have planned a capacity increase of almost 150% spread across 2 different locations. With the current capacities, our revenue should be somewhere around 225 to 250 crores for FY23. And both the expansions that we are planning to do, we intend to, commercially begin the productions in the current year itself by March FY23. Also, with the, revenue and everything, for FY24, we estimate the revenues of the company to almost go to around 500 to 600 crores with the planned expansion. And the margins and everything, we can see similar margins that we saw in Q4 FY23 to continue further, as the demand scenario and everything is pretty good, and real estate looks to be in a very good and strong shape with it.
Okay. We would have capability of more value-added products, I believe, and wouldn't that provide some kind of fillip to the margins while demand remains steady or firm, since infrastructure is also going to be a big pillar? But what is the plan on lifting the margin profile over the next 2 to 3 years, and what's the strategy going to be for the same?
So, as mentioned before, we have recently tied up with Siam Cement, and we'll be manufacturing these AAC panels in the new facility at Ahmedabad, in which the margins will be way better than what we are actually getting currently in blocks. So looking forward to that, the margins should improve, but the company, when we are projecting anything, we need to be, we don't want to be very, very optimistic on our approach, honestly. And the company is even exploring some other building materials with the Siam Cement, as well as some, other construction chemicals, which will be way higher in margins. Also, these 2 facilities that the company is planning, we'll be registering them for carbon credits as well. And the future of carbon credit market also looks fantastic. So at the end, the company expects to generate about 250,000 to 300,000 carbon credits every year post 2023. Also, the facility at Wada, which is coming up with a capacity of 500,000 cubic meters, the company will be availing subsidy of up to 3 crores every year from the Maharashtra government, which will further add to the margins as well as the bottom line.
Understood. And in terms of newer products, something you mentioned on lines of construction chemicals, could you give us a flavor of the new ones that you will be bringing to market in the next 2 years? And what's the opportunity for the same? Also, who would be your key benchmarks in India for any of those products if they are existing?
So currently, apart from AAC blocks, we are doing trading for other materials, which includes block jointing mortar, which is the chemical used for joining of blocks, as well as ready-mix plaster, which is the plaster material used after the brick block wall has been completed. Apart from this, we plan to add other construction chemicals like tile adhesive as well as gypsum plaster. So these are the other products that we are looking to add in the upcoming couple of years.
So from non-AAC block revenue, what could that slice look like 2 years down the line from whatever it is presently?
This will be maybe about 15 to 20%, but even the panels will be about 15 to 20%.
Okay. Got it. I'll get back in the queue, and if I have any follow-up, I'll ask later. Thank you.
Sure.
Thank you. The next question is from the line of Palak Agarwal from Prabhudas Lilladher. Please go ahead.
Hi Manish and hi Mohit. So basically I have 2 or 3 questions. You have mentioned in your presentation that the new capacity which is coming up in Palghar has 60% subsidy from government. And you're doing capex of about 75 crores. So is this capex amount you mentioned is net of subsidy or with subsidy? And the follow-up question on the same is that do you get subsidy in all the regions or in select regions?
So there is a subsidy only in Wada region. And other than that, maybe some other regions of Maharashtra as well. But, nearby Bombay, Wada was best suited for manufacturing of AAC blocks, Bombay and Pune being the largest market. And this subsidy will be, we'll be getting about 30 crores of total subsidy, which will be spread across 10 years. And this will be basically we'll be getting SGST refund up to 3 crores or else interest subvention or power subsidy. So, it will be a mix of all three, but the total subsidy that we'll be able to get will be maximum 3 crores per annum.
Per annum. And the 75 crores includes subsidy amount, right?
No, this is the gross capex. We haven't considered anything for subsidy in this so far.
Okay, this is not net of subsidy. I just wanted to clarify it. And yes, another thing is that what are the key factors, which could have contributed to this big jump in margins? I mean, and what are the sustainable margins you guys are having in your mind?
So what has happened in the last 15 to 18 months is, this is a direct substitute for red bricks. And red bricks used to be in the price range of almost 2,200 rupees a cubic meter, whereas AAC block used to be in the price range of 2,500 to 2,800 rupees a cubic meter. This is I'm talking about almost 18 months back. But during the last 18 months post-COVID, what has happened is the price for red bricks has also started to climb up. And at one point of time, the price of red brick had almost tripled from 2,200 to 6,650 rupees a cubic meter. Whereas AAC blocks are currently in the price range of approximately 4,000 to 4,200 rupees a cubic meter. And red bricks are currently in the price range of around 5,000 to 5,500 rupees a cubic meter. So this is one big reason that this, margins have improved as the competitive product is in shortage and their prices have also increased a lot. So it is adaptation of AAC blocks against red bricks, which is now the conversion demand is taking up quite rapidly. So earlier, around 5-7 years back, the share of AAC blocks in the walling material market was just around 3 to 4%, which today is at around 10-11%. And this share should keep on increasing over time. And if we see our margins and all, then the margin that we have seen in Q4 FY22, I think similar margins should keep on are sustainable at current levels. Maybe we can see further improvement, but these are easily sustainable.
Okay, so you're saying that the jump in margins are mainly because of two reasons. One is the higher conversion from red bricks to the block, and another one is the higher pricing.
Yes, and also the capacity utilization in this year has been far better than the earlier year. I mean, in FY21, the capacity utilizations were much lower.
Okay. And my last question would be, you have mentioned to one of the previous participants that panels which are going to be commissioned from next year, almost after 12 months, that would contribute around 15 to 20% to the revenue. So, could you please give me a bifurcated growth numbers for blocks and panels? I mean, some percentage in revenue growth for maybe next 3 years or so, because panels is something which is introducing new to the country. I mean, it is at a very initial stages.
Yes, so the plant that we'll be installing will be capable of manufacturing blocks as well as panels. So to start with, we plan to start develop the market, and so we have already started selling these panels. Currently, we are importing them and already developing a market, and the market response is quite positive for the same. So eventually, we'll be starting maybe with a production of about 30-35% panels and remaining blocks, which as the demand increases, we can shift from blocks to panels. So this will be currently at this Ahmedabad facility, and going forward, even our current facilities, it's capable of converting them into, with a small capex, we can convert them into panels as well. So panels is definitely the future product, but yes, AAC is the current product, so we are seeing good conversion from red bricks to AAC blocks, and maybe future, 5 to 7 years down the line, so it will be all AAC panels going forward.
But I would be more, interested in listening to the growth numbers. For example, your block segment could grow by this number, or your panels. So you mentioned the whole revenue guidance, that is around 200 to 250 crores in 23 and in 24 as well. So I would need a growth number, that your panel segment would grow maybe by 15-20% or higher than that, or something like that. Hello?
So, ladies and gentlemen, James, we have lost the line for the management. We would request all of you to please stay connected while we reconnect the management line. Ladies and gentlemen, thank you for patiently waiting. We have the management line reconnected. Palak, may I request you to please repeat your question?
Yeah, thank you. So I was asking more, what growth numbers can be possible from block and panels separately? That, your block segment can grow by, maybe by 20-25% per annum or something like that.
So, to give you a revenue guidance for FY23, with the current installed capacity, we see our revenue to be around 225 to 275 crores. As the planned expansion should also start in probably in Q4 FY23 to some extent. And for FY24, we see the revenue somewhere to be in the range of 550 to 650 crores, out of which from blocks we see a revenue of almost 500 crores and from panels around 40 to 60 crores somewhere.
Okay, and out of your three segments, panels, blocks, and your ancillary construction related products, which would fetch more margins, blocks or panels?
In the initial phases, blocks, because panel being a new product, initially the market adaptation and everything might take a little time. So we won't be able to command premium over it. But as in how we see, adaptation of panels, the panels will definitely have a better margin as it's a, more value-added product.
Okay, thank you.
Thank you.
Yeah. Thank you. A reminder to our participants, please press star and 1 if you wish to ask a question. Our next question is on the line of Faisal Hawa from HG Hawa and Company. Please go ahead.
Yeah. So, would any kind of a co-branding strategy, or with a superstar or a cricketer, make sense for us, like it has done for Astral Polytechnic or in recent with Prince Pipes and all? So, would that kind of a strategy work for us for having a very good brand first up, because you do have the first mover advantage?
I don't know if a cricketer or someone, but yes, a good branding will definitely help. But that I think we should be looking at once we have a pan-India presence, which we plan to cover up in the next 2 to 3 years' time. So maybe once we are there, when we have a facility in north as well as south, so then we will be looking at having some sort of a more branded branding.
So, till the time others are not waking up to the opportunity, I mean, what kind of a time frame do you feel that you have to go pan India? And how much percentage of the net profits or the net cash flow that you generate would you like to invest back into capex and get the further production up? And because you have an advantage, it seems that your new plants, the go-to market is much lesser. By the time you set up the unit and you can sell, it's a very short capex period.
Can you come back on the question again? We didn't get it very clearly.
Yeah. So what I meant is, since the capex period is quite low for us and we are already generating good operating cash flows, what percentage of operating cash flows would you like to put back into capex and expand quickly so that this first mover advantage is converted into a permanent advantage?
So honestly, the capex period, when we said that in the plant and everything, we with our expertise are able to achieve the same in about 8 to 10 months period, whereas other companies take about maybe anywhere between 18 and 24 months to install a plant. And coming back to your question, so we'll be investing all our profits and all the cash flows back in the same business. And going forward, I think post this year's expansion plan, which is for these 2 plants, next year we'll be planning it again, to have 2 more facilities. Hopefully once somewhere, in north or central India, and one will be in South India. So that is what the plan is. Also, just to give you a more brief intro on it, the current levels of debt are quite low. I mean, Bigbloc is completely debt-free. We just have some working capital limits for the Bigbloc plant at Umargaon. And for the plant in Ahmedabad, we just have a term debt of almost 12-13 crores with a working capital limit of 3 to 4 crores. So that's the only debt on the company. Apart from that, we have some commercial vehicle loans which are also on the books of the company, and that is the reason that the total debt is around in the range of 40 to 45 crores.
And
what kind of technical expertise that will CM get into the group, and how can we really benefit from it?
So Siam Cement is already manufacturing panels at 2 or 3 units in Thailand, Indonesia. So as it's a new product, new technology, so they will be, helping us, and their technical expert from Thailand will also be present in India. Also, we are exploring, as I mentioned before, we are exploring some other materials as well. So once, because Siam has a portfolio of, I think, about 10 to 15 building or materials. So company is exploring the same, to get the same in India as well.
And there is an export potential for this also?
Well, currently the local demand itself is so good that I don't think there is any need for export. Yes, the product can be exported and has been exported in past to, countries where the freight has been less, like Middle East as well as Sri Lanka. But currently, I think the international freight rates are very, very high. So I don't see any opportunity as of now.
So would it be a fair assumption to make that, for the next 4 to 5 years, we will at least grow like 15 to 20% on volume terms alone?
Well, we plan to grow more than that, but yes, we can actually assume that.
And are you seeing any green shoots on the real estate sector on ground from most of these developers, and where the demand is coming up and the payments itself are also improving?
So real estate is doing very good, and as Mohit mentioned before, we are seeing a very good conversion demand. So now the demand that we are seeing is coming from small villages as well, which were unheard of before about 2 to 3 years. So, that demand is also picking up, and which is really helping the industry.
And any social media campaign that we can plan around the ESG theme, and kind of make our brand much more youth-oriented brand also. Well, the youth itself creates the demand for the product by saying that we'll not use the old traditional bricks.
So we are exploring the same. We have actually appointed a new PR as well, and we are actually working on these lines. So I'm sure we'll be doing a lot more than what we have done in the past on the PR front.
Thanks a lot for answering all my questions so well.
Thank you. Our next question is from the line of Karthik Mediratta from Niveshaay. Please go ahead.
Yeah, congrats for the good set of numbers. My question is that how difficult it is for the cement manufacturers to venture into AAC blocks?
So frankly, the capex of one plant, in terms of capex, it's not at all difficult for anyone to enter a plant. So there are the likes of Ultratech, who had set up 2 different plants, one in Wada district and another near Hyderabad. But both their plants went shut. Currently also the Wada plant is completely shut, as they could not get the right product. They were running at a rejection level of approximately 15 to 20% from what we hear in the market. And we on average run at a rejection of level of almost 3 to 4%. So because of such high levels of rejections, it turned out very difficult, and the other cement players, the likes of Ambuja, ACC, and everyone has decided to get contract manufacturing done from the existing AAC players instead of themselves venturing into manufacturing of AAC blocks. As the main criteria for cement players is sale of their cement, and that's the reason that they're getting into forward integration.
Okay, fair enough. And sir, another one is, what is the impact of current power crisis?
Sorry, didn't get you.
Okay. What is the impact of current power crisis in Gujarat? Any impact?
So honestly, Gujarat is doing still fine. We do have some staggering of about 8 to 10 hours once in a week. But our power requirements are comparatively very less. Power cost per cubic meter is hardly 40 to 50 odd rupees. So and I don't think it will have any impact on us, honestly.
Okay, that's it from my side. Thank you.
Thank you.
Thank you. Our next question is on the line of Pranay Jain as an individual investor. Please go ahead.
Thank you. So I wanted to understand in our long-term ambition of becoming a pan-India player, which would be the next focus markets since we would be serving West very well. So where would we like to set up a plant next? Because if we look at competition, there have been a couple of announcements recently. May not be large players, but for example, there is Ronatus, which has announced a 100 crore investment for which commercial production will start from this financial year itself, and they are going to focus on Tamil Nadu and Kerala from the markets of Coimbatore. So that being a good market, what are we looking at after 2 years?
So before the company had taken over this facility at Ahmedabad, which is currently running as a wholly owned subsidiary, Star Bigbloc Building Elements, the company had identified a location near Bangalore to set up a plant there. So we'll be exploring one plant near Bangalore next year. And the second location, which is honestly there in our mind, is either, somewhere in Madhya Pradesh, because that region is coming up to be, the development there is quite good, or else somewhere, near NCR. So one will be south, that is, for sure, and one will be somewhere, one of these two regions.
Okay, and these investments would be in the ballpark of, say, 75 to 100 crores?
Yes.
Okay, and also, what is the vision of SCG for this JV over the next decade? What kind of scale do they see? If you can give some indicative numbers, and by becoming maybe a one-stop shop in this area, what could be our product profile as per 2-3 key segments and something like that? Because I'm sure this being their first investment and seems like a sunrise space. So before other competition starts making a bigger foothold, I'm sure they would have had long-term plans with you also, if something you can share on that front.
Well, honestly, currently what I can tell you is that SCG has ventured into India, so they have not come into India for just this one plant. Otherwise, they wouldn't have done it. So even their vision is pretty big, and we are already exploring, as I said, other materials, other region for AAC blocks as well as AAC panels. But I think currently it will be too premature to make, more comments on the same. But yes, I can assure you that SCG has entered India with a very large vision, and I'm sure, the association should be quite fruitful with them.
Okay, so just last on the competitive scenario, which are the kind of capacities that are coming up in the next 18 to 24 months? The large ones I would want to know in the industry.
So in the western region, there are some facilities coming up, but I think most of the facilities that are coming up are smaller plants, 100,000 to 150,000 cubic meters, and new players. Whereas near Bombay, I think there is Magic Creek which is expanding, and maybe there might be again some 2-3 smaller plants coming up.
Got it. So our current market share so far would be what? And any ambitions over the next 3 to 4 years, how you would want it to read, like double from the present and so on? Just some indicative numbers if you could provide.
Our current market share somewhere would be in the range of 12 to 15% approximately in the Western India. And the planned expansion, we intend to almost make it to 25 to 30% in the coming 1 to 2 years.
Got it. Thank you.
Thank you.
Thank you. A reminder to our participants, please press star and 1 if you wish to ask a question. The next question is on the line of Harshada Gupta as an individual investor. Please go ahead.
Hi. So sorry, I joined in a little late. So apologies if the question are repetitive. So I just wanted to know that as per your earlier notification with regards to the joint venture with SCG, you were going to come up with a plant in Gujarat. Any progress on that front?
So for the same, the land has been identified and, the due diligence for the same is on. The company has already been incorporated. And we are planning commercial production in current financial year.
Okay. So what would the proposed time of commencement of operation be?
Sorry, your voice was not clear.
What is the proposed time of commencement for operations for that plant would be?
So we are actually planning to start commercial productions by Jan 2023.
Okay. And what will the capex for that plant be, and how much will it add to our revenue?
So the plant with SCG would be of a 300,000 cubic meter capacity, and it should give us a revenue of approximately 100 crores per annum, 100 to 125 crores per annum.
Okay. And also, what would the source for this capex be? Like, what would the percentage of debt and equity be?
So in this wholly owned subsidiary, 52% will be held by Bigbloc and 48% will be held by SCG. And we'll avail a debt of almost 60 to 65%. And for the balance portion, it will be done through internal accruals or through promoters' contribution in lieu of unsecured loans as needed.
Okay, thank you.
Thank you. Our next question is from the line of Rakesh Yadav as an individual investor. Please go ahead.
Hi. Any increase in cost of blocks during this month? And have you passed on the cost increase to the customer?
There's not been much of an increase in the current month. Just maybe the cement prices might have gone up by 10-15 odd rupees per bag. And other than that, there has not been much of an impact on any other raw material.
And whatever the prices have, the cost has increased, we have been able to pass it on in the current month itself.
Okay. Since we are scaling up with addition of these plants, how about our dealer network strength?
So, just to give you a brief and more understanding on that, around 2 to 3 years back, our sales through dealers used to be in the range of 20-25%, which is now almost in the range of 55 to 60%. And around 25-30% sale is to the corporates, which includes the like of Lodha, L&T, Runwal, BG Shirke, Adani, and all such customers. And only around 10 to 15% sale is, or 15% sale is to direct builders. So every quarter we have been able to get new dealers on board and thereby increasing our market share or market presence.
Okay. Any developments on penetration to tier 2 cities?
We are already selling to tier 2 cities like Baroda, Nadiad, Anand, Vapi, Silvassa. We already have good presences here. And in fact, tier 2, now we are even able to sell material, as I mentioned before, to small villages as well, because the brick prices have actually shot up and their demand has increased. Also, brick is also in short supply. Our demand is coming in from tier 2, tier 3 cities as well.
Okay. Last question from me. Correct me if I'm wrong. I believe the bricks have now come under the GST bracket. So what impact do you see on the brick players, and will we benefit from this?
Well, definitely we'll benefit out of it. Brick has come under 12% GST. And before, I think this industry had no taxation or anything. So any sort of taxation or compliance, they'll face, I'm sure, a little difficulty, and I'm sure their productions and everything will also get affected. And it will even have a cost impact on them, which they'll be passing on to the builders and which will further lead to increase in brick prices. So yes, it's definitely beneficial for us.
So the government is also trying to continuously increase overall compliances for the brick industry. So whoever is the organized player in the brick industry, they will only be able to sustain as per our understanding. And also, the organized players, the selling price and all are comparatively higher as compared to the unorganized players. Moreover, with the further increase in diesel and transport costs and everything, so that would also have a higher impact on red bricks as compared to our product. Because the density of AAC blocks is 1/3 that of bricks, so transport costs should also increase proportionately more.
Okay, thank you so much. That is all from me. Thank you.
Thank you.
Thank you. Any participants who wish to ask a question at this time, they may please press star and 1. We have our next question from the line of Viral Parekh from Systematics Group. Please go ahead.
Yeah. So actually, I wanted a guidance on the prices. So do you see the prices of AAC block sustaining at higher levels even going forward, like in the next 1 year or 2 years, or you see a declining trend in the prices or like stability in the prices at these levels? What is the outlook on the prices?
So, we don't see any declining trend, to be very frank. Either the prices should keep on remaining stable, or if there's any cost escalation, we can see similar price increment going forward at least.
Okay. Got it.
Thank you. We have the next question from the line of Pawan Roy as an individual investor. Please go ahead.
Hi. Good afternoon, everybody. Heartiest congratulations for the excellent number which we have produced. My question is pertaining to the presentation. Then you have mentioned that the total global size of the AAC industries is about $15 billion, and it is growing at a rate of 7.5 CAGR. My question is, what is the size within the Indian market? And from within the Indian market, what is the total size of the AAC blocks? That is the bricks and AAC put together. What is the size of AAC block in terms of cubic meter? And what is the market share of the organized player versus non-organized player? Because there are more than 150 plants. And what do you expect that the CAGR will be there in India? This was my first question. And the second question is that I see we are running at more than 100% capacity utilization. And we do not have any means to go beyond 100% for the next 9 or 1 year. That is the timeline set by you for the capex to realize. So what are the arrangements or what is the strategy of the company to meet the increased demand within the sector, so that at least we are able to match the CAGR of the sector within India?
So, just to brief you about the status of plants in India. So, as mentioned in our PPT, there are almost 150 to 75 AAC blocks planned across India, and the total AAC blocks installed capacity would be somewhere around 1.5 crore cubic meter per annum. But, this product is such that it gets difficult to transport it beyond a distance of almost 300-400 kilometers. So if we see the western region, the installed capacity in western region would be somewhere around 70 to 75 lakh cubic meter per annum at the max. And out of that, we have a current installed capacity of 5.75 lakhs. So our share is somewhere around 7 to 8% of the western region. Moreover, just to brief you about the organized and unorganized players, so out of this 150-60 plants, almost around 25 to 30 plants are in the organized players who have more than one plants across India. Rest almost 80% of the plants, or 75 to 80% are unorganized players. That's what we can bifurcate. And just to brief you about the increased demand and the supply shortage. So that is the reason that we in the last 2 quarters we have done these announcements of capacity additions. which will be done in the upcoming 8 to 9 months, so that we can, so that we can fulfill the shortage of products.
Pawan, does this answer your question? Yeah.
That means there is no plan to augment capacity such as by outsourcing from the unorganized players.
No, honestly, most of the players are also must be running at full capacity. There is pretty good demand. And yes, we are definitely planning to start our commercial production at, the VADA unit at the earliest. So that's how we are working, and maybe we should be able to start the production by, let's say, December or Jan. The company is entirely focused to start the commercial production at the earliest.
Okay, thank you.
Thank you. Ladies and gentlemen, that would be our last question for today. I would like to hand the conference over to Mr. Mohit Saboo for closing comments. Thank you, and over to you, sir.
I would like to thank each and every one of you for attending the Q4 FY22 earnings call for Bigbloc Construction Limited. It has been a phenomenal year for the company, and we wish to keep on growing with the upcoming future with your thankful presence. Thank you.
Thank you very much. Ladies and gentlemen, on behalf of Bigbloc Construction Limited, that concludes this conference. Thank you all for joining us, and you may now disconnect your lines.